Nvidia and Apple are two of the world's largest companies, each boasting market capitalizations that exceed $1 trillion and are steadily increasing. The critical question for investors today is, which of these giants is the superior artificial intelligence stock to invest in? Nvidia stock has skyrocketed, driven by its AI-related product sales. These products have already generated substantial revenue and profit. Apple, on the other hand, has recently launched its AI strategy, and its stock is trading near record highs due to high expectations. Let's dive into a comparison of these two tech behemoths to determine which one might be the better buy today.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. First, let's examine revenue growth over the last decade. Reviewing the chart, we see that Nvidia, represented in orange, has typically outperformed Apple in terms of revenue growth. This trend has significantly widened over the past year and a half as Nvidia's revenues have surged, while Apple's have plateaued and even declined by 431%. Over the long term, I anticipate that the revenue growth rates of these two companies will converge, but Nvidia will likely continue to outpace Apple. The market's Nvidia targets, such as enterprise AI development, are expanding much faster than the markets Apple serves. As a result, Nvidia is well positioned to benefit from the industry's tailwinds more so than Apple, whose primary market, the smartphone sector, is already mature. Nvidia, conversely, is just beginning to tap into the enterprise AI market, with substantial investment expected in this area over the next decade. Additionally, Nvidia has opportunities in other sectors, such as healthcare and autonomous vehicles, further enhancing its long-term revenue growth prospects compared to Apple. Next, let's consider operating profit margins. Over the last decade, Nvidia has generally exceeded Apple in this metric as well. Nvidia's business is more cyclical, experiencing ups and downs over several years, whereas Apple's business is more seasonal, with fluctuations occurring quarterly. For instance, Apple sees a significant spike in sales during the holiday season, while Nvidia's performance is tied to the semiconductor upgrade cycles and enterprise investments in AI. Currently, Nvidia's operating profit margin stands at an impressive 59.84%, nearly double Apple's 31%. However, I expect these margins to converge over time. As Apple shifts more towards services, its profit margins are likely to rise. Meanwhile, increased competition in Nvidia's space will likely erode its margins. Despite this, Nvidia's current lead in operating profit margins reflects its best-in-class status. But this advantage may diminish as the market evolves. Cash flow from operations to sales is another critical metric. Both companies outsource their manufacturing, which affects their cash flow dynamics. This model means that neither company needs to hold significant inventory for long periods, thus maintaining robust cash flows. Nvidia's business model allows it to move products quickly from manufacturers to customers, minimizing inventory holding periods. Apple operates similarly, ensuring rapid turnover from manufacturers to distributors. This efficient supply chain management supports strong cash flow from operations for both companies, despite their different business cycles. Lastly, let's compare valuation. Apple's forward price to earnings P ratio is 29, while Nvidia's is higher at 38. Although Nvidia is trading at a more expensive valuation, this premium is justified by its superior performance in revenue growth, cash flow, and operating profit margins. Looking ahead, Nvidia's prospects appear brighter than Apple's, warranting its higher valuation. If I were to choose between these two AI stocks today, I would opt for Nvidia over Apple. Despite both being excellent companies, Nvidia's stronger growth metrics and better positioning in the rapidly expanding AI market give it an edge. Although I own Apple and have for a long time, my decision not to sell is influenced by capital gains taxes. However, if I were starting fresh with no existing investments in either, Nvidia would be my clear choice. To conclude, while both Nvidia and Apple are top-tier tech stocks with significant potential, Nvidia stands out as the better investment in the AI space today. Its growth trajectory, driven by the burgeoning AI sector, outpaces Apple's more mature markets. While Apple's shift towards services might boost its margins and growth, Nvidia's current lead in key financial metrics and its future prospects make it the superior choice for investors focused on AI. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.